Yes, Tushar Bhajanka joins us, Executive Director with Star Cement. Tushar, good morning. Thank you for joining us. Channel checks indicating that cement prices have gone up anywhere between 15 to 30 rupees per bag across India. Has there been any impact of demand because of this?
No, so due to the sluggishness in October, mainly in account of the festivals, the demand has been low and therefore prices did not increase. However, in November, the demand seems promising and the prices in West Bengal and Bihar have increased by about 15 rupees to 20 rupees per bag. So of course, the margins have taken a hit, and this is mainly in account of the higher fuel prices and power. So unless the cement prices increase, the margins may, hover around about 1,000 rupees per ton EBITDA.
Okay. Tushar, are these price hikes sufficient? Any more price hike on the cards?
Yes, so I think as the season is now, starting, we do expect further price hikes in later part of November and early December. And I think that is critical for us to maintain margins.
So we've seen a second quarter which is weak. Now third quarter is seasonally strong and it's underway. Has it begun on a strong note for you?
So I think, of course, the month of October was a bit sluggish, and that is mainly because we had Diwali and Chhat and Durga Puja in that month, and so the demand didn't pick up in October. But November seems very promising, and going forward, we do expect good pickup in demand.
Okay. So when you're talking about the pickup in demand, which you've also used the word good for, can you give us a sense of the kind of quantum or volume growth that analysts, shareholders can expect for the rest of the financial year? Any guidance for the new financial year too?
So, the volume growth that we're aiming at in the second half is of about 17 to 20% YOY. So that is the target. And for FY24, we'd again aim for a 15 to 20% growth to the volumes that we did this year.
Given that we have also seen fuel and power costs have corrected from their peak, they still remain quite elevated. So do you expect your spreads to be impacted on the back of this? What's the outlook for Q3, Q4?
So, I think the fuel costs, though they have come down, they're still much higher than what they were last year. And, and it is definitely going to impact the margins like we've seen for other cement companies as well in this quarter. And if, the prices aren't increased in a significant way, we would expect a margin of about 1,000 rupees, but it will be very hard for us to go higher than that without any price increase.
So can you just quantify how much you're expecting your spreads to expand in the second half?
So, I would speak about Star Cement. In quarter two, we made a margin of about 933 rupees per ton. And we'd expect the margin to be between 1,000 to 1,100 rupees per ton for quarter three.
You have a 2,000 crore capex lined up. How will that be funded? Will it be debt? Will it be through cash flows?
So yes, so we are coming up with a 3 million ton clinker plant in Meghalaya, which is due to be commissioned by December next year. And we are also coming up with 2 grinding units, so 2 million tons each in Guwahati and South Assam, which should be commissioning by October 23 and June 24 respectively. So these are the capexes that we're coming up with. And, we have about 800 crores as cash reserves in the company. And we are continuously generating good cash inflows every quarter. So we do expect most of the expansion to be funded by internal accruals. And, and we will require a certain amount of debt of about 500 to 600 crores. But the debt should not exceed that.
Expansion plans, and what kind of market share gains are you expecting because of this expansion?
So we are targeting a market share of about 30 to 31%. in Northeast, and about 15% in the markets that we serve outside Northeast.
Now, analysts believe that this capacity addition of 4 million tons in the Northeast is higher than what maybe the market size is in that region. So will there be excess capacity? And if there is going to be excess capacity, what is Star Cement going to do with it?
Yes, so that's a good question. We do expect Northeast to be growing at a faster rate than rest of the areas in India. Even this year, we have grown at about 23% in Northeast. And we do think that Northeast is pacing up to be able to absorb the capacity.
And finally, any inorganic acquisition plans?
So we are actively exploring, all the options, and we will definitely, take part in inorganic activities as well if a good offer comes.
All right, we expect to hear from you then. Thanks much for taking time out and joining in. That's the view coming in from Star Cement.